Hi, welcome to Annual Report Analysis, topic number 2. How does a business make money? In part 1, we took the case study of Microsoft and looked at its income statement and figured out how it made money. So in the part 2, let's do the same exercise for Adobe and figure out how Adobe makes money. Okay. So let's do the same. Let's look at the annual report or the 10K report. And previously, obviously, we did mention how to go and get this information. So here we are. So Adobe's consolidated statement of income. Okay, so this is part of Adobe's latest 10K report for year ending November 27th, 2020. Okay, so Adobe in the for the latest year, its total revenue was $12.8 billion. So obviously the subscription business is its major business. It was $11.6 billion. Okay, then the product and services and others were small, 507 million and 735 million respectively. Then what are the cost of revenue, right? So how much was the cost of subscription, product, services, other? If you add, it's about $1.7 billion. Okay, so you subtract 1722 from 12868, you get 11146. So that is 11,146,000,000. Okay, and then you come down. So that's the gross profit, right? So then you come down and you figure out the operating expenses. So the research and development is the first one. It is $2.18 billion. Then sales and marketing, that includes all the money they have to pay to the sales people and for marketing campaigns and all, $3.59 billion. General and administrative was 968 million for the offices, rents, and other, like for the travel and everything else. So that's the money they paid. And then there is something called amortization of intangibles. This is something we'll cover in our future sessions where we'll explain what exactly it means. Right now, maybe just keep it in mind that it's something like a deductible. They have to deduct on their intangible asset. Okay, they have to deduct every year. So that was 162 million. So if you add all these numbers, that means all the operating expense line items, you get the total operating expense of $6.9 billion. Okay, so the gross profit, it was $11.1 billion. All the operating expenses were 6.9. So you subtract that, you get the operating income. Okay, from $11.14 billion, you subtract $6.9 billion, you get $4.2 billion. And here again, you can see how it has changed. Okay, so year ending November 30th, 2018, it was $2.84 billion. It became $3.2 billion. It's become $4.2 billion. So this is also another very good growth story where it showcases how the company is growing in a very steady rate. Okay, then they have some non-operating income expense they have shown, like the interest expense, investment gain loss, and all those things are not that significant. So overall, it was about $61 million, the non-operating expense. So if you from 4237 you take out 61, you get 4176. So that's the income before income taxes. Okay. Now from that they paid the income tax. They have to give a provision for income taxes. That was 1084. Now if you are looking here for the year 2000, so these are the other years, right? 2018, 2019. If you come down, if you look at these numbers, right, they're pretty interesting. They actually they had 254 million was a provision and the other was 203. And here actually they have a benefit. That means instead of deducting, you added. So you're like, is that like a refund they got from the IRS? Well, not exactly. It's basically, it's again, it's to do with how income taxes are calculated. We will cover in detail. So right now you can say that there are something called deferred taxes. Okay. So this got changed a lot because they might have had like some impact because of change of tax rates and everything. So actually, if you add all that, their net income became $5.2 billion. Okay, and so 4176 you added 1084, it became 5.2 billion. But in the previous year it was 3205, and they deducted 254 million. It becomes 2.295. So this is also another very important reason one needs to understand how income taxes are calculated. So think about it. This is not something that's going to happen every year, right? They're not every year. There's sort of only once in a while a company gets a benefit like that. And so if someone was just looking at the net income, they'll be like, wow, the company has almost doubled its net income. Well, not exactly, because if you look at income before taxes, from 3.2 billion, they've grown to 4.1 billion. So that's about, you can say, somewhere about 27%. But if you look at the net income, it's almost double. It's about almost 44% growth because of this like one time change in the income taxes. Now why it has happened and how one can predict that, we'll learn a lot in the analysis of income taxes. But I just wanted to give everyone a little like preview, like why income taxes are really really important, and one needs to understand that really well, how it's calculated for a particular company and how it can change in future, because that does impact bottom line in big way. And one needs to kind of, if you're trying to project a net income or trying to figure out how much they're going to earn in future, one needs to understand this. Okay, so here obviously, because it was they got a benefit, so their income per share was $10.94, because again, if you did take the net income and you divide by shares outstanding, so here you see that. So here they have 481 million shares outstanding. Okay, so you divide 5260 divided by 481, you get this number. Okay, and then similarly the diluted was 10.83, because the diluted shares outstanding is 485 million, and the differences between diluted and basic is because they do have in the diluted you do like take care of the stock options and things like that. So that's the major difference, right? So now here, let's look at the breakup, right? So here for Adobe, in the note number 2, they have this. So again, in the previous video for Microsoft, I mentioned every company has a different style of showing up. So in Microsoft, we saw it was note number 19, but here in the note number 2 itself, they are showing. Okay, so Adobe has broken their businesses into 3 parts: digital media, digital experience, and publishing and advertising. So what is each? Let's look at it. Digital media provides tools and solutions that enable individual teams and enterprises to create, publish, promote, and monetize the digital content everywhere. Okay, so their customers include content creators, experience designers, app developers, social media users, and all those people. So digital experience is segment provides product services for creating, managing, executing, measuring, monetizing, and optimizing customer experience, from analytics to commerce. So here it's more to do with the analytics part of their business. And similarly, the customers are same, but the products here are different. They're more into analytics. These are the tools. And publishing and advertising segment provides market opportunities ranging from diverse authoring and publishing needs of technical and business publishing to legacy type and OEM printing businesses. Okay, for advertising, cloud, web conferences, document forms, and prime time. So if you come down here, you can see what is the breakup. So right, so $12.8 billion was their total revenue, and you see the publishing part, which was their legacy businesses, like such a small part of the business now. So their main thing is digital media, all these products and the tools that they use, the web developers use for creating content. That is their number one business. And the cost of revenue see is so little, and the gross profit here is $8.8 billion. Okay. Second is obviously the analytics part, the digital experience. There it was $3.1 billion. The cost was 1.1 and gross profit was 1.99 billion. And then publishing and advertising is a small part. It's about 266 million. Okay. So here you see the breakup, and here at the bottom you do see how it has changed each year. Okay. So publishing and advertising used to be a bigger part of the business. Obviously, it's coming slowly coming down, and digital media is where they're really growing a lot. Okay. So then here also they have shown the breakup, like, obviously US is their main market, but also they have European Union. They've got a good presence, and Asia Pacific also. So they're kind of pretty much divided, but still Americas is more than 50% of their revenues. Okay. Now here the revenue by major offering in the digital media. So they have the cloud. So basically the creative cloud and document cloud, they are giving the breakup. What was the breakup? And out of 9.2 billion, creative cloud was 7.7 billion and the document cloud was 1.49 billion. Okay. And in the advertising cloud, the subscription to services, they have given the breakup. Okay. Now obviously one has to little bit research more, like what exactly is the creative cloud, what is the document cloud, and why creative cloud is growing at a faster rate. So obviously this is like if you really are interested in analyzing the company more. So basically if you think about it, annual report analysis just gives you the guidelines of how you have to go and analyze further. So it might not give you the final answer, but at least here it gave you the clue that, okay, you'll need to figure out. So if you're trying to invest in Adobe, then you'll have to figure out what is the creative cloud and why it is growing at such a, like, fast pace. And what is the document cloud? So what's the difference between those two? So that's another thing. So we'll keep learning as we go on, like, how to use the annual report to like, analyze the business from end to end. So that's the, so hope you found this video helpful, which actually showcased the breakup of how Adobe makes money in the different segments. So again, so if you have any questions, please reach out to me at annualreportanalysis@gmail.com. Thanks and have a nice day.